A wonderful good morning. It is August the 11th, and we are here with that Wednesday episodes of That Crypto Show. My name is Dirk Hartig. I am the head of trading education here at primexpd.com, and I also have the pleasure of being your host on this live show here today. We have put together a great show to you. Of course, we will talk today about Bitcoin, about what has been happening there lately on the movements, especially we saw yesterday on the market. I'm going to give you a really in-depth look into one of my day trading strategies. A lot of people asked actually for that yesterday because, I always like to make the hints on this show, like where I might look for entries and exits for the market. And by the end of the day, I then choose to give you a little bit of insight of what I really did yesterday in terms of day trading. So you maybe can learn from that a thing or two and maybe adapt to your own strategy. Before we start, as always, I need to do this, it's important, guys, we are all professionals here at primexpd.com, especially within the research team, but nothing we tell you here is financial advice. We are here to help you become a better trader by offering you education, by offering you an insight into the minds of institutional and professional traders that have done this for a long time, and to help you to develop your own trading strategy. So don't just follow blindly, and that is true for everything in life probably. Learn, come up with your own trading strategy, and do your own due diligence. Before we start, I always every day look at this fear and greed index for Bitcoin. Still agreed. I was expecting a little bit after yesterday's movement, although this one is 7 hours old already again. New one should actually come out any minute now. Let's have a quick look. It's a notification. No, somebody liked a tweet. All right, then we look further here. So fear and greed index here at 70, at least 8 hours ago, meaning we have entered a zone of greed. 2 weeks ago, we were in the extreme fear section still. And this means to me, for my day trading strategy, that I'm going to try to look for zones where to go long in Bitcoin, because the most of the market is positive. So a large portion of my day trading strategies are trend following strategies. Or sentiment following strategies. Sentiment means what is the general condition of the market, how is the expectation at the moment of the market participants, are they positive for Bitcoin? Are they maybe over positive? So are we in a zone of extreme greed or extreme fear? And usually, and I always like to repeat this, you can see in this when we have entered a level of greed or extreme greed, that you'll have more or larger green candles on the daily chart, and really actually on almost all time frames. Then you have red candles. On the contrary, if we are in an area of extreme fear, and we used to be that when we fell down all the way from the tops down to 30 or 29,000, we had weeks and weeks of being in the zone of fear and extreme fear. Where you usually see the downswings being higher. And also true for news, if you have bad news coming out in the sentiment of fear, the market will overreact to the bottom and will ignore positive news. So when we were in the sentiment of extreme fear down here, for example, the market completely ignored that El Salvador decided to use Bitcoin as a legal tender. On the contrary, now that we are in an area of greed, the market tends to ignore bad news, as we saw yesterday with the US infrastructure bill, which is potentially bad for for miners and developers that work with Bitcoin and other blockchains or with cryptocurrencies in general in the United States, and sparked the fear of knowledge going offshore from the USA. Was ignored because the market is in bull mode. Good news tend to be ignored. And once we enter the extreme sections here of extreme greed, extreme fear, those are the areas where you need to become a little bit cautious then, because it's usually only a matter of time until the market flips to the other side then again. And this can happen very, very fast with Bitcoin. But as a general rule, I try to look for my day trading strategies, at least at the moment. Today, I like to look for long entries. And if you saw the show yesterday, and if you didn't, I highly advise you to do so. So you can rewatch it on Twitch or YouTube on our channel there. And the links to those channels you will find. When you're watching by YouTube, you're there anyway already. If you're watching by Twitch, we usually upload our daily videos there as well. And yesterday I said my preferred strategy for the day would be to look for long entries in this area of 45,000. And this is really what I did. And I can show you exactly how I executed this. So what you see here is a 5-minute chart now, and let's zoom a little bit into yesterday. So this goes from 10th of August, 12 midnight to 11th of August in the morning. And so the show was on here around that area here at 10 a.m. yesterday. And I said there, I for my day trading strategy there, I'm going to look probably for entries in the area of 45,000 plus minus. Why did I say this? Because yesterday, first of all, we had a positive sentiment. We had a sentiment of green. I think actually it was roughly the same. I think 71 or something like this. So that made me think, okay, I should look for long entries. I don't want to go against the market sentiment at the moment. And the second important thing is that we saw the day before, so on what was this, on Monday, Bitcoin piercing through and closing above this important 200 days moving average. And my assumption yesterday was, okay, probably the market wants to test this area again. It would be very rare. At least I cannot remember that I've seen it before, that the market pierces through this important 200-day moving average. Why is it important? It's important because so many people look at it, especially institutional investors, that is. And it would have been very rare, unseen in my opinion, probably unseen, but at least I cannot remember an incident where Bitcoin did this before. I have to look at the chart there a little bit for the last year or so. And where Bitcoin would pierce through it and then just continue up without retesting it at least once. And this is what Bitcoin did yesterday. We tested it. We closed a little bit lower than we opened yesterday, and we tested it. And you can see this on this 5-minute chart. We were going sideways for large portions, and then in the evening, and that's probably why I look a little bit tired today as well, because I was staying up quite long that day, because you have to seize the opportunity once it's there. So my game plan there was, okay, I want to buy around this area of 45,000. I placed 3 buy orders. My first one was at 45,200. Second one at 45,000, and the third one at 44,800. Why didn't I all place at 45,000 exactly? Because the market is not precise. There's always momentum, and very often it will turn around before it reaches those areas. And you saw this before here at around 2 p.m. We almost hit the 45,200. There I thought already like, okay, after we went up there, maybe I missed the train on that. But that's part of the game, would have been part of the game. My game plan was to have 3 orders pending there. Eventually, they were all executed. I had a stop loss down here, which I named here my initial stop loss of 44,000. Why did I have a stop loss down there? Because whenever I enter the market, and it doesn't matter which time frame that is where I enter the market. So if I'm trading 5-minute charts, daily, monthly, 1 hour, 30-minute charts, or even odd numbers like 3 minutes or 7-minute charts, I always, as a professional trader, want to have make sure that I have a game plan. A game plan, I mean, I not only have to come up with prices where I want to enter the market and in the direction I'm trading. So long, this is what I explained to you just now. I have an exit strategy if I'm wrong with my trading decision. So if the market would have tumbled down here, I thought, okay, if we see the 44,000, I think it's very likely that we are going to close probably below the 200-day moving average again, with the next day then probably continuing lower again. So that was my exit strategy. So with 3 orders executed, I risk $1,000 per Bitcoin. Now I want to put the risk reward ratio into my favor. If I risk $1,000, I want to be able, $1,000 of movement. If you do this with position size of 10 Bitcoins each, you're risking more. You would risk 30 times 1,000, so $30,000. But I want to make sure if I risk a price movement of $1,000 to the downside, that I can at least earn $1,500. And if you watched one of our episodes before that, I'm doing this because I want to ensure that the math works into my direction. The math meaning if I risk $1,000, I want to be able to earn $1,500. Why is that so important? Because if I always do that, I only need to be correct around about 44% or 42% of the time, and I'm still not going to lose money. So the math is much more in my favor. Yeah, I can be, even if I'm just coin flip right, meaning 50% of the time, I'm still going to earn money. If I'm correct only 42% of the time, I'm still not going to lose money. And this is extremely important. This is always the first step every trader needs to learn to breathe in and to internalize. You have to make sure that you have an exit strategy and that you are able to earn more than you are risking, because you want to put the math in your favor. Yes, that means in this case that I cannot blindly enter the market and trade up and down and try to ride out every single micro movement we see here. You could do that, and there are people that are doing this successful. Don't get me wrong. It's a valid strategy, but you need, of course, to suit the strategy to your own personal time frame. And I used to be a scalper. Yeah, I used to trade much more. I don't do that anymore because probably as I get older, I have gotten more patient. That could be the thing. And I learned that I have to put the math in my order in my favor. So, and as you can see, my take profit was up here at 46,500. And by the way, it just 10 minutes, I just saw that got executed. So nice. I made on those trades 3 times $1,500. I'm not going to tell you my trading size though. And so very well, perfectly executed trade in my opinion. And I'm not telling you this here to brag somehow or to show you, oh, I'm the guru here that is always right about the markets. I'm not. This trade, I would have shown you this trade anyway. Also, if it would have stumbled into a stop loss. Why? Because the message I want you to take away from this is not Dirk is very often correct about the market. No, the message I want you to take away from this is, hey, this guy has a game plan on where he wants to enter the market, how much he's willing to risk, and how much he wants to earn before he's entering the market. So this is very important. Now, If, for example, the scenario would have been that I enter the market here, I have my stop loss down here, but I see only upside potential to, let's say, 45,800. I couldn't have had my stop loss down here. My stop loss would have needed to be higher because I always wanted to be at least 1.5 times of my take profit, 1.5 times of my stop loss. If this is hard to understand, don't worry about it. Just take away the most important thing here is really just take away that you need a game plan consisting of where do you want to enter the market, into what direction, and why. So my hypothesis yesterday was the market is sooner or later going to test the 200 days moving average again. And you cannot see this on the 5-minute chart, but here it is. So at around 45,000. So in that vicinity, I want to enter the market long because the sentiment is still positive for Bitcoin. And being in a positive sentiment, the probability of a market defending that zone is higher, in my opinion, than it piercing through to the downside again. But should I be wrong, I will exit the market at 44,000. So I'm risking per position on average $1,000. And one $1,200, one $1,000, and one $800 to be precise, but that is on average $1,000. And because I'm risking $1,000, I want to earn at least $1,500 per trade on average. That is the price movement multiplied by my position size, obviously. So if I did this with 1 Bitcoin each, I would have earned now 3 times $1,500. Pretty nice for a day of work, no? Isn't it? And so the take profit up there, I thought, yeah, okay, this suits very well. We're in this area where we topped out in the morning and in the evening before. So there's a likelihood that we are going to move again. If not, I'm going to exit here at 44,000. And then I had a game plan, but it failed. Okay. I was not right. But turns out I did everything okay. And yeah, you also see things like this very often. You know, you have your take profit and then your position runs to almost the take profit and goes down again. Nothing wrong there, of course. If it's so close already of manual closing this, I stay patient here. You know, through the years, you learn to just stay patient. And of course, if it has moved already in your direction, eventually you want to move your stop loss to break even, or you want to move your stop loss to an area here or here where you see support, because if it's run up already $1,200 in your favor, of course, you don't want to risk to lose it all again. And so this is really a bit of an art and not an exact science, to be precise. So yeah, nothing fancy really here, guys. So this is a good example for how somebody that only executes a couple of trades with most of his strategy works. There's a hypothesis, which is the market will probably test the 200 days moving average again, and it will bounce off of it. So I want to enter around this area. I will risk X amount of money, and I want to earn 1.5% at least from it. And it worked out very well. Again, I'm showing you this not to give you financial advice. I'm not telling you you should do this today again. You have to, there's more to it. This is always a whole package of things you have to take into consideration. But I'm showing you that you don't need like fancy indicators, Bollinger Bands, RSI, or you name it. There's so much out there to come up with a trading strategy. Something like this you can actually set up in the morning. Yeah, you could have this game plan ready already in the morning. You could have placed your trades there, limit trades, limit buy trades, already with a stop loss and a take profit, and then you could have turned off your laptop and go to work. It's very possible. Trading is possible for every time budget. Of course, there are people out there that very successful trade with minor swings also. I do that as well, but it doesn't make sense to start explaining the more complicated things. If it works for you, if you are a person that says, I need my RSI, I need my Bollinger Bands, and so on and so forth, I need my momentum, MACD, and you name it, yeah, then use them. Use them. It's just always important that you have a game plan consisting of where do you enter, in what direction, where's your stop loss, where's your take profit, and do stop loss and take profit make sense. Quite easy, isn't it? So nothing really super fancy to it. And by the way, I wouldn't be surprised if we see a test again today of the area of its 200 days moving average. I wouldn't be surprised at all about this. And you saw in the early morning session, we went already down here a little bit. Where was the low actually today? Here at 45 to 50 roundabout. But it's also very typical that it was deflected sooner again. So let's see later if we go down back into this area or if we continue up. I have for today, of course, my strategy, my game plan in place already again, which I'm going to execute then. Okay, second thing I would like to talk about today is kind of a bad headline. And sorry, I need to take a sip of coffee. Really was up very long yesterday to look at the markets. But my mentor back then told me, Dirk, trading is a job where 75% of the time you're bored because nothing is happening that suits your trading strategy. But when things are happening and the last 25% take effect, you need to be there and you need to harness the situation really in your favor. So you'll end up sometimes staying up very late. Sometimes most of the time you get to go home a little bit early. All right, but this is what coffee is for, isn't it? Good. This headline: more than 600 million US dollars stolen in what is likely to be one of the biggest cryptocurrency thefts ever. So this is an article from CNBC, but it's seeing a lot of coverage, actually, this headline, naturally today. They are talking about Poly Network, a platform based in the USA, I think, that was aiming to connect different chains together so they can work together. It's like connecting, for example, Ethereum, Binance Coin, and so on and so forth. So you can have inter-blockchain interaction there. And it is quite a large so-called DeFi project. DeFi meaning decentralized finance. And this was hacked, and 10,000 users got robbed of their cryptocurrencies that they used on this Poly network, worth more than 600 million US dollars. And it's very cute. Poly Network disclosed the attack on Twitter and asked to establish communication with the hackers, urging them to return the hacked assets. Yeah, right. As if they are going to do this. That's really desperate already. It's because the company is done probably for, and there are a couple of angles to this whole thing which concerns me very much not only as a trader. So this is not so much about trading, this headline, but as an advocate for decentralized finance. Because if you have something that you are advertising as being decentralized, and Bitcoin is the perfect example for a decentralized application. Bitcoin is an application on the Bitcoin blockchain, if you want. You can say you can treat it at that, at least. And it's decentralized because there are 10,000 or 11,000 nodes worldwide that verify the transactions. So in order to gain access of the network, you would need to capture 51% of the whole network, which by now, because the network is so large now, would mean you need to invest an insane amount of money, probably more than any country in this world can really afford, to just capture it. It doesn't mean you've hacked it yet or you've taken it over. And so if there's a vulnerability in this Poly network, and there was, that allows a hacker to steal the crypto assets of 10,000 users of this networks, I'm asking myself, can it really be a decentralized network then? This sounds more like a centralized network to me. So, and I think this is so important because it shows the importance of you and me and everybody out there doing the homework of due diligence. DeFi, decentralized finance, is a buzzword at the moment. Yeah, if you are out there and you are looking maybe for funding from angel investors, from venture capital, at the moment it's a good idea, or at least up to this point, it was always a good idea to say, yeah, we are doing decentralized finance. We are aiming on connecting the users directly with each other. Meaning, for example, if I want to borrow money from you, I can do this directly through this decentralized network. You don't need a third party anymore, like a bank, which obviously wants to have their cut as well to bring the borrower and lender, the person that wants to borrow money, the person that will give this credit together anymore. The idea is very good. Directly connecting people. This is what Bitcoin does by the end of the day. But in this case, it seems that this Poly network was not really decentralized because there was something in the network that allowed those hackers to gain access to 10,000 wallets, I assume it was, of users and steal 600 million US dollars worth in cryptocurrency. So sounds to me like a centralized company, a centralized network going on at least at one of those many layers that there must be between the different blockchains. So what we can take away from this is that just because something is called DeFi and decentralized, it doesn't necessarily mean it's decentralized. So if you are thinking about using networks like this, and there are a whole lot of other companies out there that say they do DeFi, decentralized finance, always do your homework. Look under the hood, ask really critical questions if what they are doing is really decentralized, if the users are directly connected without the company, in this case, Poly Network itself, being able to access the wallets, or is it by the end of the day a centralized service, like, for example, most of the exchanges out there are as well. They are centralized because you don't have access to your keys. They have the private keys to the wallets you're using there, which of course must be done because otherwise would be hard to transact this. But yeah, ask yourself questions like this before you engage with a so-called DeFi company like this. And for sure, it's not going to be the last hack we've seen there. By the end of the day, the old slogan, not your keys, not your wallet, comes into effect again. And with this, I'm going to finish today's broadcast of that crypto show. Stay safe out there. Remember always to have your game plan ready, have a stop loss, and preferably use a take profit. Take care and stay healthy, and see you again tomorrow. Goodbye.